Hello everyone. Welcome to the Stock Minds web channel. Transmedics Group, NASDAQ TMDX, has emerged as a standout performer in the medical technology sector, delivering robust financial results and demonstrating significant growth potential. The company's Q1 2025 earnings report highlights its impressive revenue and earnings growth, driven by the increasing adoption of its innovative organ care system, OCS. In this video, we will dive into Transmedics' recent earnings, stock performance, growth potential, and the risks investors should consider. About Transmedics. Founded in 1998 and headquartered in Andover, Massachusetts, Transmedics Group specializes in organ transplant therapy. The company has developed the Organ Care System, OCS, a portable platform designed to maintain donor organs in a near-physiologic state outside the human body. This technology addresses the limitations of traditional cold storage methods, potentially improving transplant outcomes and expanding the donor organ pool. Transmedics offers OCS solutions for lung, heart, and liver transplants, positioning itself as a leader in organ preservation and transportation. Transmedics' financial performance. In Q1 2025, Transmedics reported revenue of $143.54 million, a 48.2% increase compared to $96.85 million in Q1 2024. This growth was primarily driven by strong liver OCS sales, which reached $109.1 million, surpassing expectations. The company's earnings per share, EPS, for the quarter doubled to 70 cents from 35 cents in the same period last year. On a trailing 12 months TTM basis, revenue grew by 64.43% year-over-year, reaching $488.23 million from $296.92 million, while EPS improved significantly from a loss of 32 cents to a gain of $1.41. The company also achieved a gross profit margin of 59.47% and a net profit margin of 10.03%. Return on assets, ROA, stood at 4.2%, and return on equity, ROE, was an impressive 22.99%. However, the debt-to-equity ratio was 1.95, indicating a higher reliance on debt financing. Over the past 5 years, Transmedics has achieved a 100% CAGR in revenue growth, which is impressive. Net income turned positive in 2024 and has continued to grow since then. Transmedics 2025 financial forecast. Analysts forecast revenue of $580.67 million for 2025, representing a 31.51% increase from 2024's $441.54 million. EPS is projected to rise by 78.93% from $1.01 to $1.81 in 2025. The consensus price target is $110.50, with a buy rating, suggesting a potential downside of 0.9% from the current price. In my opinion, due to its strong financial performance, Transmedics has the potential to outperform the market, suggesting an upside of more than 20% from the current price. TMDX stock price performance and valuation. At the time this video was created, Transmedics' stock price stands at $112.72 per share. Over the past year, the stock has declined by 13.4%, underperforming the S&P 500, which gained 8.4% during the same period. However, over the past 5 years, TMDX shares have surged by 672.1%, significantly outperforming the S&P 500's 97.1% increase. The company's current price-to-sales (PS) ratio is 7.64, with a forward PS of 6.5. The trailing PE ratio stands at 79.28, and the forward PE is 61.27. If we look at the valuation over the past 5 years, Transmedics' forward PS ratio is significantly below its 5-year average of 11.1, indicating that the stock is trading at a discount. This lower valuation is due to reduced expectations for the company's future growth. However, Transmedics has still managed to grow rapidly in Q1 2025, exceeding analyst estimates. Therefore, the current lower valuation may present a buying opportunity. Transmedics growth potential. Transmedics' business growth potential is driven by several factors. 1. Expansion of transplant logistics network. Transmedics expanded its transplant logistics network, increasing its aviation fleet to 21 aircraft by March 31, 2025, from 19 at year-end 2024, with plans to operate 20 to 22 aircraft by Q1 2025 to meet growing demand for its National OCS Program, NOP. The CEO emphasized that these investments position the company to capitalize on anticipated growth in OCS NOP missions in 2025 and beyond. The company's target of 10,000 annual U.S. OCS cases by 2028 reflects a clear long-term growth runway, driven by increasing adoption and transplant volumes. 2. Outlook for 2025 revised to positive. In a significant vote of confidence in future performance, Transmedics management has revised its full-year 2025 revenue guidance upward. The company now expects annual revenue in the range of $565 million to $585 million, representing approximately 30% growth at the midpoint compared to the previous year. This upward revision is notable as it substantially exceeds the earlier guidance of $530 million to $552 million that was announced on February 27, 2025. The increased guidance reflects management's optimism about continued strong performance throughout 2025. This upward revision is particularly meaningful as it comes after the first quarter results, suggesting that early 2025 performance has exceeded internal projections and created confidence for the remainder of the year. The 30% projected annual growth rate indicates that while the percentage growth may moderate somewhat from the 48% seen in Q1, the company still anticipates robust expansion throughout 2025. 3. New clinical programs for heart and lung transplants. Transmedics is set to launch new clinical programs for heart and lung transplants in 2025, pending FDA approval. These programs will expand the company's addressable market beyond liver transplants, where it already holds a strong position. The OCS platform for heart and lung is expected to improve transplant outcomes by preserving organ quality and assessing viability prior to transplantation, potentially increasing the utilization of marginal organs. Management highlighted confidence in service revenue from these programs even as product revenue ramps up, with details dependent on FDA-approved trial designs. The launch of these programs could significantly boost revenue, given the large and growing markets for heart and lung transplants, addressing unmet needs in end-stage organ failure treatment. Risks to consider. Despite the promising outlook, investors should be aware of certain risks associated with Transmedics. 1. Legal and regulatory risks. Transmedics faces significant legal scrutiny, highlighted by a critical short seller report released in January 2025. The report alleges serious misconduct including kickbacks, billing fraud, unreported device failures, off-label use, and monopolistic practices, describing the company's operations in highly negative terms. Such allegations could lead to regulatory investigations, legal liabilities, and reputational damage, which pose material risks to the company's financial health and stock performance. 2. Market penetration and logistics complexity. Transmedics has addressed logistical challenges by developing the National OCS Program, NOP, a comprehensive network that includes trained medical specialists and a dedicated logistics fleet to support organ transport and management. This infrastructure aims to overcome previous barriers such as expensive and unreliable aircraft availability and the need for on-call medical teams, which limited scalability. Despite these advances, the complexity of coordinating organ procurement, transport, and transplantation remains a challenge. Efficient logistics are crucial to ensuring organs remain viable and that transplant surgeries can be scheduled during regular daytime hours, which improves surgeon workflow and patient outcomes. Any disruptions or inefficiencies in this network could slow adoption and limit market penetration. 3. Clinical and development risks. The outcomes and timing of post-approval studies and clinical trials for Transmedics OCS products, including new lung and heart programs launching in 2025, remain uncertain. Unfavorable results or delays could hinder regulatory approvals and limit product adoption, affecting long-term growth. Transmedics aims to achieve 10,000 OCS transplant cases annually in the U.S. by 2028, but this goal relies on scaling clinical support and infrastructure. Execution challenges in expanding these capabilities may impede progress toward this target. Conclusion: Transmedics Group has demonstrated strong financial performance and significant growth potential, driven by its innovative OCS technology and expanding market presence. While the stock has experienced recent volatility, its long-term prospects remain compelling. Investors seeking exposure to a high-growth medical technology company with a unique value proposition may find TMDX an attractive addition to their portfolios. But remember, this is not a financial advice. What do you think about Transmedics? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.